Everyone's asking the question of when is the right time to invest in the real estate market. Should I wait for there to be a crash so I can scoop up a good deal? Or if I buy now, do I have to worry about going broke in the future if there is a crash? And how does that affect my property? Well, I'd like to give you an alternative thought process to all of this, to all of the doom and gloom, and give you a little bit more confidence and control to your own situation. Let's go. So let's get into some basic economics so that we can all be on the same page as we kind of continue through this. First off, the economy normally goes in an 8-year cycle, 8-year business cycle, where there is expansion, it hits the peak, and then it starts making its way into a recession, immediately after. And something that we've been experiencing with our economy is that we've been reaching new peaks all the time. And so people can't help but ask that next question of, okay, when's it gonna fall off? What's gonna happen here? So when a recession or a correction happens, you can often see the value of properties going down. And now this is due to there being more supply and less demand for these properties. And that is what attributes to the decrease in value. And the same is true inversely. In a good economy, there is less supply and higher demand, and that drives the prices up. After understanding the economics piece of all this, you can kind of see why it's so enticing for you to time the market and kind of look for a better deal. Because nobody wants to buy, a $600,000 property only for it to be worth $300,000 a year later. It's ridiculous. And I know that's an extreme example, but I just want to prove a point here, basically, that as the value goes down, people are trying to time it based on that value. And so why wouldn't people just wait for the dip and then buy at $300,000 and then maybe see the property increase in value over time then you're buying at the bottom price. Why wouldn't you just do that? Now, while you can always wait for the market to dip and wait for however long that takes, because nobody really knows, I'd like to offer some sage advice, and it's just an old adage that goes, time in the market is better than timing the market. And because it's impossible for anybody to know when the market is actually going to crash. If people are telling you they know when it's going to happen, I would put some distance between myself and them, because it's just impossible to know. Our economy is so large that there's a variety of factors that could be the cause of it, and any one thing could be it. And so I wouldn't wait on anything. I would put more time in the market and try to understand what's going on in your area, what kind of real estate is selling and buying, and seeing what prices are going to work for you, building out your comps, talking to other people, reading books, leveraging your network, finding out what successful people are doing and doing something about that, and taking steps in the right direction to have more time in the market so you can make better decisions. Do you know what else can't be timed? Hitting the like and subscribe button. Putting time in this channel will make all the difference. And here's another perspective. Rent doesn't decrease in a down market. So if you've done your numbers right, if you're making sure that your property is already cash flowing, you have nothing to be worried about. Even if your property goes from $600,000 to $300,000 in value, you're still cash flowing. It's still making sense as an investment property for yourself. So what are you worried about? There's nothing wrong there. But I'm sure you're asking the question, but wait, Andrew, hold on. You just said that my property losing that much in value is a good thing. From $600,000 to $300,000? How can that be a good thing? What am I thinking? How does that make sense? Now, hold on, because I haven't even gotten to one of the better parts of real estate investing. And that is that even if your property decreases in value right now, that is only in the short term. Because as we had previously discussed, if you're in the recession and you're seeing the value of your property going down, it's okay. Just don't sell it right now. Because if you sell it, then you will actually take the loss. And that's basically what economics says, is that you only lose when you sell. In this instance. And so if you can wait out the storm and kind of wait for that expansion period and to kind of hit maybe the peak of that market before selling again, then you could actually see the value of your property going back up. You could realize those gains and you wouldn't have to worry about your property. So try not to think so much in the short term when it comes to real estate investing, because it really is all about the long term. And really the only downside of this is that in a recession, because it's this 8-year cycle, right? Your money might not be as efficient as you want it to be, because if your property is valued at that lower amount, then you probably won't be taking money out at that time or trying to sell it. So your cash will kind of be stuck in the property, so it's not as efficient, but I mean, the downside is that you just hold money for a little bit longer in the property. Not so bad. And really, it's pretty small apples when you consider how much you've been cash flowing this entire time on top of your tax write-offs. Because, you know, you calculated it accurately. You know exactly what's happening. So you're getting cash, baby. You're making all that money. So you don't even need to worry about it because you set yourself up correctly. And then additional to not investing, if you decided not to invest in real estate, here's a couple of things. Due to the pandemic, we printed out more cash than ever, leading to the craziest inflation that's happening. So if you actually have cash in your bank account, cash in your pocket, cash underneath your bed mattress, you're losing value and you're losing money because you don't have it invested into an asset, something that can help build you money into the future. So make sure that you're putting the cash into investments that are providing for you later on down the road. And, you know, as they say, the best time to plant a tree was 20 years ago. The next best time to plant a tree is today. So make sure that you start reading, you start talking to people, leveraging your network, and getting after this real estate. So once you have the knowledge in place, you take action. So get after it. Anyways, thanks for watching, you guys. Hope you liked and commented on the video to let me know your thoughts on timing the market versus time in the market.